Hi, I'm Garth McKenzie from traderscorner.co.za, and this is your once-a-week look at the S&P 500 and the NASDAQ indices. And this week, I'll also be taking a look at the VIX. So let's get started with a look at the S&P 500 index. Here we've got the daily chart that we're looking at the moment. And what you can see, this market is still in a very nice linear upward trend that has been intact since March or April of this year. Over the past week, we've seen the market break to new all-time highs. So it's broken out above that February high, which is at around about 3,400. So the market's taken out that prior high and it's now into blue sky territory. So overall, still looking very good here on the daily chart, above all the trend lines, above the moving averages, and no clear divergence evident on any of the moving averages or any of the momentum indicators on this chart rather. Then let's take a look at the hourly chart, and this still looks good, but there's a couple of warning signs just to be a little bit aware of over here. So you can see that the market did break out through that 3,400 region that I've alluded to. It actually gapped out through that region last week, which is a bullish sign, and it's continued higher ever since on this hourly chart. The upward trend still very much intact there. The warning signs come in the form of negative divergence that is evident on the RSI at the top of the chart there and on the stochastic oscillator, which is at the bottom of the chart. What those negative divergences indicate is that the market might just be slowing down in terms of its upward trend, and that negative divergence does sometimes precede a pullback in the market. And to that end, let's then take a look at the chart of the VIX. This is an hourly chart of the VIX that we're looking at now. So it looks back over the last month or so at the volatility index. And what's quite interesting to note here is that there's actually been a pickup in VIX over the last week or so. And that's quite interesting to note that it's come about at a time when the index itself, the S&P 500 index itself, has been making new highs. So you've got a little bit of divergence here where the VIX is picking up and the market is still making new highs. That might also just be a bit of a warning flag that this market is running a little bit hot, and there's a potential that we may see a little bit of pulling back in the not too distant future. So I think just keep an eye on that. It's certainly almost acting like a speed warning for the market, the fact that we've got negative divergence on the oscillators and then also this VIX index that is picking up whilst the market is making new highs. Then let's take a look at the NASDAQ. This is the daily chart of the NASDAQ that we're looking at over here. And once again, we've got a beautiful linear upward trend. It's really a nice tidy channel that we can see to the upside there on the NASDAQ. Every time this market has pulled back to the bottom of that channel, it's been met with buying interest, and that remains intact for now. So nothing not to like about this chart on a daily basis. If we then zoom in a little bit more closely and take a look at the hourly chart of the NASDAQ, there you can see again this index continues to trend nicely higher. The steepness of the rising trend does seem to be elevating slightly, and that does sometimes begin to become a little bit of a concern if the steepness becomes too steep. And what's also notable here is that there is some negative divergence on the RSI at the top on this hourly chart of the NASDAQ. So once again, what that means is that the upward trend is still very much intact. That much we cannot doubt. But the negative divergence does just send a warning signal that perhaps the speed of this upward trend is beginning to slow somewhat. And that negative divergence can sometimes precede a bit of a pullback in the market. And then finally, let's take a look at the VIX of the NASDAQ. So VXN is the code here. And here we see a very similar picture to what we alluded to on the S&P 500. You can see that the VIX of the NASDAQ has been picking up. So implied volatility on the NASDAQ has been pushing higher over the last few days. And that's been happening at a time when the price of the NASDAQ itself has been making new highs. So once again, that is also just possibly a little bit of a warning flag to be aware of. Yes, the market is trending higher, and there's no disputing that, but some of these internals are beginning to flash a little bit of a red light in the form of negative divergence on the momentum indicators and your VIX that is beginning to tick up on both the S&P 500 and the NASDAQ. So just be keeping in mind those slight warning flags for the week ahead. That's all I've got for you this week. I'll be back again next week with another look at the S&P 500 and the NASDAQ indices.